Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined today by Nicol Dynes, Dan Innes and Lisette van Doorn. And our special focus this week is residential. But let's start with a roundup of the week. Lisette, what have you been seeing, I guess, both from the market but also from ULI members?
Well, we're actually seeing more positive news coming through, first of all, with more shop openings across Europe, but also offices reopening. In some countries, for example, Germany and Belgium, we see people going back to the office. So there seems to be a real appetite still for offices. And we've also seen shops reopen in France, Switzerland, the Netherlands, where they've never really closed. Germany already for a few weeks. Of course, footfall has been much lower than pre-crisis, but slowly it's improving. And we've also seen in some examples, for example, in France, where retail parks opened, in the first few days, people were queuing to shop. That seemed to have been more a temporary trend, but across the board, we're really seeing improvements.
I noticed JR Capital making a long-term acquisition in Leeds city centre. That suggests a sort of positive view, I think, on some of these city centre shopping districts. Dan, what have you been seeing this week?
Well, it's been more of a neutral week in terms of sentiment. I feel like there's a lot of lockdown fatigue at the moment. So a lot of people are sort of reflecting on their experiences with COVID. So we've had William Schooler, he's the head of private client lending at Investec, saying that private investment in real estate still remains attractive despite COVID. He mentioned about the Knight Frank attitude survey which came out. He talked about how that 28% of clients' funds were allocated to property as an investment, outstripping equities at 23% and fixed income at 17%. And even according to RCA data, private investment in commercial real estate climbed up to a record $333 billion in the 12 months to quarter four 2019. So, interestingly, he confirmed that there's a lot of growing realization now, and I think we're seeing that this week, that COVID's going to have an impact. It's going to accelerate a lot of climate change agenda. We also saw an interesting interview with the chief exec of Great Portland Estates. He said the firm must plan for a recession. Quite bold words there. But after they posted some fairly resilient performance, actually, but in a very sort of honest interview, he said GPE had been in discussions with occupiers to accommodate requests for rental concessions, like monthly payment terms, rent deferrals, some case rental holidays. But looking into the future and a little bit brighter, GPE has sort of additionally set out its plans to become a net zero carbon business by 2030. And that kind of reflects some of the things that I know that Nicol touched on in the last few weeks. And lastly, it was great to see Landsec have gone into planning on a major project in southeast London on Lavington Street. It's going to create 430,000 square feet of office space and just over 40,000 square foot of retail spaces. So it's great to see some big applications going in.
Okay, great. Thanks, Dan. And Lisette, there was a report from the ULI out this week. It'd be interesting just to share some of the highlights from that.
Yeah, that's a report that we did together with EY, commissioned by Paris La Défense and the Global Business Innovation District Club. And it was interesting. We took a long-term perspective, and what you actually see if you then try to overlay that with the COVID-19 impact, that a lot of the trends we saw already are basically accelerating. It's some decelerating, but especially it's all about the human factor. It's all about transforming business districts into interesting entertainment, living, work districts, where you can do all that together in a sustainable environment with lots of green space, air quality, ability to walk and cycle. And of course, the key question also in generally dense environments, it's about how to be, say, COVID-proof, pandemic-proof in high-rise buildings. And of course, we don't have the answers of that yet. But there's a lot of discussion around that already, how to build those communities. And what we've also seen is that we often get the question do we ever need offices again now that we're so used to working from home? And what you see is that there's that real need for social interaction, and people want to get back to the office. It may be much more phased out. We don't do 9 to 5 working days in the office anymore, perhaps, which also puts much less stress on transport systems. But there is a real need for being together, for creative processes, for innovation processes. So that was quite interesting. And if you then look at the report, which are the strongest business districts, it's still the Western business districts which are in the top of the ranking. London ranks first, followed by New York and Tokyo. But what we've seen is the gap narrowing much more than we saw in the previous report, which was published in 2017. And we also saw Asian business districts especially improving massively on the back of much higher quality of stock, much higher proportion of graduate students in those cities, as well as improvements in the public transport.
Nicol, you were looking at some of the research as well.
The theme seems to be, again, sort of short-term pain and longer-term gain. There was some new research from Savills on Europe, and it says that European investment activity will crash. Definitely in the next 3 to 6 months, we'll see a 50% fall, which chimes also with some real data that have come out from RCA, that there were 230 deals in Europe in April, which is around 1/3 of the April 2019 figure. So definitely a sharp fall in the short term. But according to Savills and others, there will be an equally sharp rebound. Often comparisons are made with the great financial crisis. We saw a plunge of 72% in transactions. But according to Savills, this time round it would be very different, because the situation is very different. That low interest rates, a stronger banking system, and constrained development pipelines, and so on. There are a lot of objective positive factors that will contribute to a sharp rebound after around 6 months. An interesting thing is that the sector that Savills points at as a particularly resilient sector is residential, and already in April, only 57% of European markets reported stable investment activity in the residential sector, which is a much higher percentage than other sectors. And Savills points to multifamily in particular as being the most resilient sector going forward within residential.
And Lisette, you and I also recently had a report out, particularly looking at that sort of affordable housing side.
We particularly looked at the mid segment. We call it intermediary housing, for households not eligible to any support from the government, but not able to pay market levels. And we looked at what can you do to improve delivery of that in terms of planning, development process, construction, because it's not market level, it needs some kind of subsidy. That subsidy can be done either in kind or monetary. So we've looked at how can you reduce the risk so you can lower the return. It's about speeding up planning processes by city governments. It's about transparency in planning. The public sector needs to set the framework. So the private sector knows what the requirements are and can help with the delivery. Then there are all kinds of specifics on unit size, on sustainability elements, because often also people think building more sustainable costs more. But we've seen a couple of examples where that definitely is not the case. Because if you look at affordability in a holistic way, so not only the rent or the market price, but also energy costs and expenses that need to be made. If you have a sustainable building, households can even earn money from the energy by generating more energy with the building than they need themselves. So there are many different ways that can help to deliver more affordable housing.
And I spotted on a positive note, Chris Garner at CBRE had posted on his LinkedIn page that he'd had a mild version of the virus, and so had just donated plasma to help others suffering with COVID-19. So thank you, Chris. That's a positive note to end on this week. Thanks, Nicol, Lisette and Dan. Thank you for joining us, and look forward to seeing you next week. And as well as our regular roundup, we'll have a special focus on debt, finance and investment. Thank you.